Hello, everyone. Thank you for joining today. My name is Daniel Waldron, and I represent the Consultative Group to Assist the Poor, CGAP. For those of you who do not know us, CGAP is a think tank focused on financial inclusion, and we are housed at the World Bank, within the World Bank, but we are funded by over 30 external members. I'm here today, along with Akanksha Sharma of the GSMA, to present a new paper that was just released on Monday, Testing the Waters Application of Digital Payments in Water and Sanitation. And along with the two of us, it was co-authored by Carolyn Frank and Alexander Soteriou, so a big thank you to them as well. Akanksha, before we dive into everything else, would you mind saying hello and giving us a quick introduction to the GSMA and then the work you do there?
Hi, everyone. I'm Akanksha Sharma, and I work as a senior manager with the GSMA. The GSMA M for the Utilities program, we're funded by the UK Department of International Development and the USAID. The way we work is we disperse these funds in the form of grants to unlock commercially sustainable business models that use mobile technology to deliver affordable and improved energy, water, and sanitation services in emerging markets. On the slide here, you can see the grantees that we've supported so far. We've supported 50 organizations with a total grant funding of 9.4 million. In the water and sanitation sectors particularly, we have provided funding to 20 organizations in Asia and Africa. That's all about our work. I will now ask Daniel to take on and take us through the findings from the latest research we've done with CGAP. Thank you. Over to you, Dan.
Great. Thank you, Akanksha. So just to get some logistics out of the way, this is a one-way webinar, and attendee mics are turned off. So although you may be moved to passionate speech during the presentation or the discussion, we will not hear you. So instead, please type your questions and observations into the chat box on the bottom right there, and make sure to select all participants from the drop-down menu, otherwise we will not see it. And if you're worried that you missed anything throughout the webinar, because we will not be going backwards, but we will be sending it out to everyone listening, so please look for that link. You'll get it within a day or two, and forward it to your colleagues and friends who might not have been able to attend. Just to go through the order real quick, Akanksha and I will present the paper, and then after that we'll invite our two distinguished guests up and have more of a free-flowing debate around some of the key issues within the paper. During that whole time, we'll be collecting and collating questions, and we'll throw it open and try and answer as many of those as we can within the given hour we have available. So please be sending them in as they occur to you. No need to wait for later. Speaking of our distinguished guests, on the line with me as well, in addition to Akanksha and myself, we have Halima Marunga on the line. She is the head of business development for Wonderkid Limited. Wonderkid develops and implements ICT solutions in some of the most interesting ways and some of the most interesting sectors around. Their platforms and their applications keep dairy supplies fresh, they keep policymakers informed, court files active, and they keep, importantly for this discussion, municipal taps running for millions of residents across Africa and really around the world, including right here in the US. They have products active or in development in 9 countries, especially in Kenya where Halima is based. And they're just one of the most innovative firms I've met working in the water sector. So, hi Halima, how are you?
Hi Daniel, thank you for the introduction. Couldn't have asked for anything better.
Well, thank you for joining us today. Really appreciate it. Also here with me in DC is John Ikeda, Senior Financial Specialist at the World Bank's Water Global Practice, which is the largest single investor in water projects around the world. They offer loans, grants, and technical assistance to governments to support expanding or improving water infrastructure. They support improving management practices and ensuring community engagement. John has really extensive experience working with innovators in the water and sanitation sectors, and he's written papers on microfinance for water and sanitation, blogs for CGAP and the World Bank on innovative digital finance solutions. And he's the lead author on an excellent new paper, FinTech for the Water Sector, Advancing Financial Inclusion for More Equitable Access to Water. Please Google that after you have finished reading ours. And just a big thank you to John for being with us today. So, all right, without further ado, let us get into it. I'll give a brief primer to digital finance because I hope we have some people on the line from the water and sanitation sector, and perhaps they're completely familiar with this, but perhaps not. So just a little bit of an intro I thought would be useful. Digital finance is just financial services, and we all know what those are, delivered via digital channel or technology. And there's not really a hard line between the two, but some obvious channels would be mobile phones, or credit cards, the internet, smartphone solutions, obviously, and of course the blockchain. We'll mostly be talking about mobile phones today. And when we talk about mobile payments, we're largely talking about mobile money. There are certainly other ways to pay with the phone through an existing bank account or through airtime, but the vast amount of mobile payments for the customers we want to reach are going through mobile money platforms, which at last count by GSMA had reached almost 300 million accounts, so with just about half of those in Africa. So what does that mean, and how does it apply to water and sanitation, where we have, as you'll see at the top here, these massive gaps in coverage and poor service for a lot of the people who are covered? What causes those gaps? So what are the challenges we're trying to address, right? There are a bunch of them, and they're not necessarily listed here in order of magnitude. But obviously, we have really ineffective operations by a lot of providers, not always for their own fault, but it's really difficult to service the number of customers they have to at the tariffs they're allowed to charge. There's inefficiencies in meter reading, billing, and collections. Non-revenue water, I think many people are familiar with water. So that's water that is either pumped but never paid for. And it's either not paid for because it leaked on the way and never arrived, or because the consumer received it, but the money never got back to the provider for one reason or another. And we can talk more about that. Expensive connection costs still remain a significant barrier. So water connections or toilets can cost upwards of $100, even significantly more. And those can represent a high upfront expense for households, which keep people from connecting or installing the assets they need. All this creates somewhat of a vicious cycle, right, where low willingness to pay for poor service makes the service itself poor over time, which further decreases the willingness to pay. And there's just obviously a larger macro funding problem for the sector, where we need to raise, in the hundreds of billions of dollars per year, trillions of dollars long term, to get real universal sustainable access. So I could go on and talk about other challenges in terms of tariff setting and cost recovery, but this is plenty to occupy us for one morning. And so back to that question, where does digital finance fit in, right? Well, we see it as having three core functions, and it's mainly the first two I'll chat about today. The first is digitizing collections and the sort of associated processes, and Akanksha is going to talk more about that in a minute. But just going from cash payment to digital payments has a lot of benefits for both the provider and the user. The second benefit is by enabling pay-as-you-go business models. We've seen this happen really effectively in the solar and clean energy sector, but we believe it applies equally, if not more so, to water. And these are automated service models that dispense water after you pay for it, as opposed to paying, or in many cases not paying, one bill at the end of the month for the water you've consumed in that month. That's a postpaid system. So we'll talk more about pay-as-you-go and prepaid models later, and they can be somewhat controversial. So hopefully we'll get some questions about that. We can talk through that. And then there's certainly other things that digital finance can do to help finance connections or to help deliver smart subsidies. We're not going to get into that as much today, but it's obviously still a top-of-mind use case as we look at the sector. So you combine all of these things together with proper management, and we believe that they can make an important contribution to achieving high-quality service and financial sustainability. But that was our belief, right? That was the theory, and we wanted to see what was actually going on in practice. So in 2018, together with GSMA, CGAP we partnered on qualitative research to really get a sense for how digital payments are being used or not used, and why, in water and sanitation. And so to do that, we interviewed 25 organizations last year, and those conversations formed the main data source for both the paper and this webinar. Organizations of all sort of types and color, although you see a lot of blue, and different types of operators, crucially. So urban utilities, small water enterprises, these are people operating sort of micro utilities or operating franchise models in different peri-urban or rural areas, even in some urban areas on occasion. People who are manufacturing water ATMs, smart meters, other hardware, offering software solutions to big utilities and small water service providers. Also a number of container toilet providers, which we can talk about more as well. And one large donor in Gates who was kind enough to speak to us and has a really unique and deep perspective on the sector. They're located around the world, certainly operating in Latin America, Africa, and Asia, although the bulk of the customers being served by these providers were certainly in Africa. we'll see as you go through the paper that 10 out of 15 providers, so 2/3 that are customer-facing, so that actually serve and collect money from customers, were using digital channels to collect that revenue, and the amount they were actually collecting over digital certainly varied. This should not be viewed as representative, so certainly the sample has some bias in it, but just to give you a sense of who we talked to and where they were at. And 7 of the 10 firms who were offering more sort of hardware or business-to-business services were facilitating in some way, enabling their partners to also accept digital payments. So that's sort of a bit of a long intro, but gives you some idea of how we got to where we are. Now, what did we actually hear in these conversations? Well, it turns out cash is quite expensive. How expensive? One small water enterprise provider is working in over a half dozen different countries. They're paying 20% of their revenue collected to vendors. Now, these are people just sitting at taps, collecting cash as people, pour buckets of water, and they're taking 20% of that cash as their commission. That's a substantial amount that goes into the pricing of the water. That's revenue that the provider never sees, and also the cash-based solutions allow for some discernment, let's say, in terms of who pays and who doesn't, so there can be more non-revenue water there. For a larger utility like Ghana Water Company Limited, which is the national utility for Ghana, they've done a thorough analysis, and about 3.3% of their monthly revenue is dedicated just to collecting that revenue. And that's a lot of different costs, right? That's banking halls, it's transportation of physical money, it's staff time, it's printers, it's paper, it's everything, right? All of that adds up to about $4.5 million annually, so it's a significant cost. For a much smaller provider doing equally important work, Luwat in Madagascar are sending people around to people's houses, collecting container toilets. These are professionals. They have a very difficult job, and Luwat doesn't want them to have to be collecting cash and reconciling that at the end of the day. But the cost of having them do that were up to 15% of their pricing model before they implemented digital payments. And for just an outstanding example for me, the Nairobi City Water and Sewage Corporation, before they were really rolled out M-Pesa, and then one of the highest, of all the providers we spoke to, I think they were the second highest in terms of percentage of revenue coming over mobile money at about 40%. Before that, they were spending $600,000 annually just on postage for the bills they were sending out to their various customers. So you can see that cash adds up the cost in a number of different ways. And this is really significant, I think, particularly for this sector, because these costs that we're talking about are deadweight costs. They add no value to customers. And for providers, particularly in this sector, they have a very difficult time raising prices, both because there's a low willingness to pay for some of these services, but also because the tariffs they can charge are nationally regulated. In some cases, it would take an actual act of parliament. So and you see the quote from Lori here, if costs are fixed, then the only way to become sustainable is to really bring those down or to sell more. And luckily, that's what we saw happen. As we saw people begin to roll out digital solutions, we did see some really impressive cost savings and some other benefits for the providers. So in Haiti, Soil, which is a sanitation provider there, they lowered their cost of collections by 95%. Kiwasco, which services Kisumu in Kenya, they're a major urban utility working with Wonderkid, and hopefully Halima will talk more about that. But they increased their revenue by 28% and increased their revenue billed by 7%. So that was a whole suite of digital solutions that had really important effects for their business model. Clean Team, which is similar to Luwat, they're a sanitation provider. They estimated that when they went from 25% mobile payments to 95% mobile payments, that netted them a 2 percentage point increase in their gross margin. And for a business like that, that's a really significant increase for what is overall not a terribly difficult shift. And Safe Water Network, which builds and operates small water enterprises in rural Ghana. They also have a franchise model they operate in India. But in Ghana, they went from a 30% net loss to a 1% net surplus when they introduced digital finance coupled with prepaid solutions. And I'd like to really dig into this last one because they've done some impressive financial modeling around what digital finance actually means to their operation. Now, for them, as I said, it's inextricably linked with adopting pay-as-you-go service. So in the baseline scenario here, you see a 26-cent loss per every cubic meter of water they're dispersing. That's obviously not ideal for them. Now, some of those costs they're bearing are normal. They're just the fixed costs of their operations, of their plant and their treatment. But one of the reasons we see it being such a net loss given versus the revenue is because they're actually not getting a lot of that revenue. There's a significant non-revenue water amount here where it's being consumed at taps and people never pay for it, or it's postpaid connections where bills go unpaid and arrears pile up. So Safe Water Network obviously wanted to address this and get it to a more sustainable operation. And they rolled out prepaid meters and water ATMs. Now that involves a considerable sort of capital expense, which they cover the upfront cost of, but they expect the tariffs and the ongoing revenue to cover depreciation and replacement of those assets, so they have to factor that in. That brings us down to 36, 37 cent loss per cubic meter. But that's where the savings begin to come in, right? Because by relying on digital payments as opposed to cash, Safe Water Network goes from paying 20% of its revenue to vendors to half or even less than that. This is modeled at about half. For the near future, they will still need to pay somebody to top up prepaid cards or to handle some of the cash in for mobile payments, but it's still a considerable savings. And then the real impressive savings, which gets us to a net surplus, is from the increase in revenue. So this is the result of adopting those prepaid systems, and this is not hypothetical. These numbers are based on a pilot run by CGAP and Safe Water Network together in Ghana, where the effective revenue per bucket actually doubled when users switched to prepaid. This was due to the arrears that they had accumulated being paid down and the non-revenue water being effectively eliminated when you went to a prepaid system, and you ended up with the net surplus, which obviously puts Safe Water Network stations on a much more sustainable path for the long term. And a big thank you to Sandy Huang of Safe Water Network for sharing this with us. But there are a lot of other benefits beyond just the cost savings of digitizing payments. And so I'll hand things over to Akanksha to really talk us through what else digitizing and introducing mobile solutions can do for water and sanitation providers.
Thanks, Dan. You actually said everything. But then again, there are some other benefits that I should be talking about. Number one is that when we spoke to some of these interviewees, we found that pay-as-you-go solutions actually worked best when the payment bit happened digitally. So in terms of the remote switching on and off of the system, whether it's a water point or a sanitation service point, that can still happen digitally, and people continue to use cash for the payment purposes. But we found that when the prepaid meters were installed without digital connections, there was a requirement for these systems to manage cash. And as Dan just said, cash is expensive. One has to pay commissions to the intermediaries, and then the cash itself needs to be saved and transferred securely. This is a challenge for the user who is carrying the cash, as well as for the attendant at the kiosk who is probably collecting the cash. So it's the safety aspect of it, which also is taken care of by digitization. Secondly, digitization actually creates automatic and indelible records of a transaction, creating transparency, preventing frauds. And you would say, oh, well, this is the most obvious thing. But when we spoke to these people, this came out as a real challenge. What was happening was sometimes the intermediaries that provide water, they were doing it at exorbitant markup prices. So the service provider, for instance, agrees on a 40% markup. There were cases where water was being sold at a 700% markup. So this is a huge challenge and huge barrier for the users to adopt these services. And then again, the third issue with cash is even when you take cash, when it comes, it can take days or weeks to be entered into the accounting system. So these longer reconciliation times for the customer, it basically means somebody could cut off their services just because even after they've paid for water, the services could still be cut off. For the service provider, this means that they have to wait longer before they reinvest that revenue to expand their businesses. Digital payments, on the other hand, shorten the cycle. So as soon as the customer is making a digital payment, the backend system immediately generates a token code. But there's a further layer of complexity to this. And I'd explain it with an example. So basically, what happens is often the pay-as-you-go service provider tends to get an Excel file from the mobile money provider when the cash has been paid, and that then it takes a while to manually reconcile the balances with the respective customer account. This can take from a couple of hours to maybe 24 hours for the service provider to be notified that the payment has already been made. This can lead to errors, delays, and ultimately it erodes trust in pay-as-you-go services on the customer's end. So we at the GSMA developed what we call the Instant Payment Notification Hub that enables pay-as-you-go providers to easily receive instant notification of customer payments from multiple mobile money providers with whom they have made commercial agreements. And here I must emphasize that the intention is just to notify, and the IPN Hub does not process the payments themselves. We started it in, I think, end of 2016, 2017, but now this has scaled, and 2 million unique payments, payment transactions have been processed by February 2019. We've integrated 7 mobile money providers across 6 countries, and we plan to do more in 2019. I'm sure some of the participants would be more keen to know about it and learn about it. Please drop a note to me in the chat box, and I can email the details to you, put you in touch with the team that works in IPN Hub. We're very keen to speak to you. Now, moving on, let me talk about, Dan, if you could go back again. I still need to cover the mobile operator bit. Yeah. So I wanted to explain the benefits of digitizing water payments for the mobile operators. It's an obvious two-way street. It's not just that the service providers are benefiting from it. Mobile operators are gaining through increased customer stickiness, more mobile money adoptions, and increased revenue per user, in theory at least. So to explore this more, we, as a GSMA Mobile for Development Utilities team, we conducted qualitative field research at 10 self-service water kiosks in Kenya that were being offered by Grantees, and the payment was being provided by Safaricom. We learned at 6 of the 7 sites, mobile money was being exclusively used by the customers, and in fact used independently. So this ties back to what Dan was saying. Though they had an attendant sitting there to make sure that the water comes to the kiosk and it's pumped, if it's being pumped through the borehole, it's available and all that. But in terms of the mobile payments, customers were fairly independent. Now, you would argue that this is Kenya, everyone knows about M-Pesa. But a step change that we noticed here was that this customer familiarity with M-Pesa was leading to more frequent and diverse use of mobile money. So while previously they were using their interaction with mobile money was limited to only receiving or withdrawing mobile money or buying airtime, they were now actually using the payable function, not just for water services, but also for shopping, for paying school fee. And we crunched the data that Safaricom gave us, and there was a number that came up. 35% of these customers were using that payable function for the first time after using the Grantees kiosks. That is a huge point that can be made to the mobile operators on why should they be partnering with water service providers. And on the customer side, customers were becoming more intelligent, more financially conscious. They were tracking and optimizing their spend on water, all thanks to digitization. On to the next slide, then. I think I've spent a lot of time talking about the previous slide, so I will quickly skim through this one. The point that we are trying to make here is that the use cases of digitization are way beyond payments. As Dan emphasized earlier, it's for meter reading. You can do it for billing, for customer feedback and inquiries. And as we know, non-revenue water is a big impediment to sustainable services and reliable services. So some of these actually target bigger utilities. Decentralized water supply solutions are a small part of the water delivery mix. The bigger portion of the pie, and arguably more valuable to digitize due to the sheer scale and the existing processes that I have, is the centralized utilities that build, manage, and operate piped water networks. Digitizing their billing processes and also customer feedback processes have shown a clear reduction in non-revenue water from many utilities. Halima from Wonderkid, who's our ex-grantee, is on the panel, and she can talk more about the benefits a number of Kenyan utilities saw after adopting billing and customer management systems here. On meter reading, it can be done, like just in terms of what applications can be done, this can be done manually or automatically. So manually, a meter reader could go using a mobile phone, or even the customer using their own mobile phones, they can get the meter reading, it can go, or automatically it can happen using machine-to-machine systems, where the reading is directly sent to the server from the meters to the servers. So these are a variety of applications that go beyond payments and are hugely useful. I would kind of stop here, though the slide was a bit rushed. I guess it would give you more impetus to read our report and the associated blogs. So I'd let Daniel walk us through the remainder of our research learnings. Over to you, Dan.
Thank you very much, Akanksha, and hopefully we can get back and dwell more on those points if we get some time during the question and answer. So we've talked a lot about the benefits thus far, but to linger for a minute on the challenges, because we spoke to a number of providers who either weren't offering digital solutions or it had taken them longer than they wanted to, and it's important to understand why, and the paper offers a lot of recommendations and discusses these in a lot of detail. But just to highlight 4 of them. There's a real lack of data, right? And it's very hard to make a business case for digitizing anything, figuring out what it will save you on collections or what it will generate in revenue, if you don't know what your revenue is or how much you spend on collections. But that is the state of play for many of the large providers that we spoke with, or that certainly the B2B providers we spoke with, they talked about their clients. And that lack of both data and analytical capacity is a real barrier to implementing digital solutions. And I think Halima's quote there really gets to that problem. Integration remains a challenge, and hopefully we can talk about this a little bit during the discussion. It's one that we're certainly working on solving. Mobile network operators within the last 10 years have become incredibly central companies to the lives of everyday people, and they are the gatekeepers to these enormous digital payment platforms. There are obviously a lot of people that want to get in, and this creates a real resource burden for mobile network operators. So GSMA and CGAP have both spent considerable time working on standardized, harmonized, open APIs that can help to make payment and data integrations easier. And obviously, Akanksha just talked about their Instant Payment Notification Hub, which goes a long way towards easing this process for digital finance-enabled providers. And hopefully we'll see this challenge diminish in the future, but it was certainly one identified in the research. Transaction fees remain a barrier, particularly for low-income users, if they are structured regressively. So if it ends up costing, 5 cents to make a $1 payment for water, that's a real disincentive for somebody to adopt a mobile payment solution if it's still just $1 in cash. So making sure that tariffs are structured appropriately to get people to actually use them for small ticket purchases is an ongoing challenge for a lot of providers and for the operators themselves. And lastly here, but top of mind for many of the people we spoke to, is that savings from digitization are often staff savings, right? They're people that are no longer being paid to man banking halls or to go around and collect physical money. And this makes for really hard decisions, as well it should. So whenever possible, providers are looking for more efficient places to allocate their staff, shifting them from banking halls to customer service, as opposed to just making cuts. But it is a real consideration, and these end up being hard decisions, and it's one that people are constantly thinking about how to manage, and that does, I think, keep people from adopting sort of purely digital solutions out of a responsibility to their employees. So the paper goes into all these in much greater depth and really explores some of the solutions for different challenges here. In conclusion, and then we'll shift things over to the discussion, we have and continue to have great expectations around the potential for digital payments in the water and sanitation sector. I think Akanksha and myself have talked about a number of the different benefits we've seen and we hope to see rolled out further. We certainly hope to see adoption of more of these solutions in other geographies. Right now, we've seen them really take off in places where mobile money is present, and as that begins to scale in South Asia and elsewhere, we hope to see more of this kind of solutions developed. But I think it's important to remember and to close on the point that these are all just technologies, right? They are not a substitute for proper management, and they won't be effective without proper management. So without a clear focus on a business model that works, knowing what your customers want and knowing how to deliver to them in an affordable and sustainable way, digital finance can help you do that, but only if you know what you want to do. And so just returning to the point of management and customer centricity as being fundamental, essential building blocks to any of these solutions working. That, I think, was our real key takeaway from the conversations we had. And one more thank you, I think, to the 25 different organizations that were able to speak to us. And with that, we will move into the discussion portion of the webinar. A reminder, please, to everyone to send in your questions now. We'll be getting to them quite soon. But first, I'd like to open up the discussion to a couple more people, and Halima and John. Thank you again for joining us. Halima, if it's all right, I'd like to start with you. You've had a chance to look at the paper and you've listened to our presentation today. What are your takeaways? This is something you work on every day, and I'd be curious to think what resonates with you, or what do you feel is missed, and really what stands out?
Thanks, Daniel. I think one of the biggest highlights is the fact that you were a lot of clarity in documenting the different scenarios for the digital payment markets across all the different countries, from the likes of Kenya, that's early adopter, to new markets such as Ghana, and how what's been the sort of uptake. And another thing I'd like to point out is it was very good that you brought up was the commercial agreements that service providers can engage with the telcos. This is something that we struggle with quite a bit, is with all the markets that we enter, trying to demonstrate the use case of why utility payments should be something that the telcos should focus on to provide their customers with something that is to allow the mobile wallet to be turnkey. So those are my major take homes from the report.
Well, I'd certainly like to dig into that commercial agreement question a little bit and maybe get Akanksha's perspective in a minute. But John, why don't we hear from you? What are your main takeaways from having read this report and obviously having worked on this sector and this question a bit recently?
Great. Well, first of all, I mean, it's a fantastic piece of work, and I think this really is helping advance the state of knowledge in the sector. And for me, what I found most surprising today, and in also reading the report, is, I mean, the cost savings around digital payments is incredibly impressive. If you think about the main characteristics of the water sector, it is very capital intensive. There's huge resource needs in order to achieve the Sustainable Development Goals for water, on the order of, I think, over $100 billion a year just in new capital investment. It's also, in general, a pretty inefficient sector that tends to be, in general, not able to recover costs related to service. So I think any opportunity where there can be cost savings from it, first just in reducing the operating costs around collections, but also in increasing payments and increasing transparency, making sure that the revenues that are collected aren't being misused. I think it's a tremendous opportunity. And I think, furthermore, what's really interesting that you've highlighted today is this split between larger utilities that tend to be providing postpaid service, right? You use water, and then you get a bill, and then you pay the bill. And then this really interesting group of emerging sort of off-grid providers. Tend to be smaller, typically social enterprises, and a lot of them are offering prepaid services. I think there's a role for digital payments in both of these. The larger utilities, who we typically work with, there's a tremendous need to innovate. Regulated monopolies generally are not the most dynamic, innovative organizations. But I think, at this point, particularly given the challenges I mentioned in the sector, moving to digital, creating a full digital strategy top to bottom, not just around digital payments, is critical. And then on the smaller providers, we do some work with that as well, particularly around container-based sanitation. And I think what's fascinating about prepaid there is that it actually enables business models that wouldn't be viable otherwise. So in addition to the cost savings, I think it's really opening up new opportunities to serve people who traditionally have been very difficult to serve in the water sector. Finally, and this is where, I hope, as Halima mentioned about this, making the case to the MMOs for this, and this is a role, I think, where the World Bank can play, given our role in policy dialogue and advancing the development agenda, is, digital payments aren't just about benefiting the utilities or benefiting these new off-grid providers. It's about building a critical mass of transactions, a critical mass of users that make it possible to scale mobile money in a country. And the Vice President for Africa at the World Bank recently announced our strategy for a digital moonshot for Africa, with the idea of vastly increasing the number of digital payments that we see across the continent. And particularly with utilities, there's over 300 million connections in Africa, the vast majority prepaid, or postpaid, excuse me. And assuming these are monthly bills, you're looking at over 4 billion transactions per year that could potentially be digitized. And so the hope would be that this is something that could really catalyze a step change in the adoption of mobile money.
Well, there's a lot there to unpack, but thank you certainly for the perspective. And obviously, if you want to hear more about that, certainly, as I mentioned earlier, you can look at John's paper on fintech in the water sector. Halima, if I could go back to you and talk a little bit more about Wonderkid and the work you do with the utilities. I'd be curious if you could take us through, you've done a number of these engagements now in a number of different countries. I know that they are not simple A to B engagements, but rather, I guess maybe if you could take us through, what do utilities generally want when they come to you, and where do they end up? What sort of solutions are important, and how do you eventually get them to where they want to be? If you could maybe take us through a sort of sample engagement, I think it'd be really helpful for people just listening to get a sense for the various challenges that they deal with and that you've talked to me about in the past.
Thanks, Andrew. So we've engaged with about 30 utilities across the continent. And typically when we engage with the utility management, you always start with the leadership. It's to get to really understand, what exactly is the main problem that they're trying to fix. Typically, it's usually a revenue problem. And this is due to the fact a lot of reforms have been happening in the water sector. So utilities have moved from being, municipal, either locally or centrally funded entities to, let me call them pseudo-independent entities that have to sustain their own operations. So whatever revenue you make is whatever revenue you pump back in. So it completely changes their perspective on what sustainability is. And from the initial engagements we get to understand, okay, if it's a revenue issue, exactly what is causing the schism of the various revenue leakages that you're facing. And once you got the blessing of the leadership, we cascade down to really understand what are the challenges across the various levels of the utility. So starting all the way up from the levels of staff and across various departments. And you may discover things like a lack of interdependency between departments. So even as much as we want to make a revenue, however, if your technical departments and your commercial departments are not working together, regardless if there's a pipe burst, for example, and you're losing X amount of water, this, of course, affects the amount of water that eventually has to be pumped into the system and supplied to customers. So therein lies, of course, a loss for the commercial department. So if there's a lack of interdependency, you find that there's an issue. So getting to really appreciate how the departments work. Another aspect that we look at is the fact that with a lot of utilities that, they've evolved over a number of years, and you have staff who've worked for these utilities for over 20, 30 years. And typically, there's a mid to the field team staff. Of course, the leadership, because of the new reforms, a lot of them will either stay between 3 to 6 years on maximum. So you do get to lose a lot of the knowledge that is held by the senior management. So we always make sure that we really engage with this mid to tier staff who really understand where the company is coming from, what exactly have been the challenges as the company has been progressing, and it allows us to understand how technology can be used to sort of help them leapfrog. Another important aspect is ownership. So typically we'll form a joint project team, which is of course led by one of the utility senior management. And we'll make sure that we bring in a project team that is inclusive, so that draws from all the different departments that will be affected by the solution that we come up with. So typically we'll start with the identified pinpoint areas. This is from all the various interactions that we've had. And we'll sit down with the project team and come up with a solution. And typically we'll have a lot of internal awareness campaigns and use continuous feedback as a means to make sure that whatever the staff see as new features or new system upgrades that can be added, we add that to the technology stack.
Great. And could you just, I know given our past discussions, talk a little bit about, before digital payments and digital finance get involved, the idea of just having that two-way channel for communication and the importance of digitizing all sort of customer interactions and being really customer-focused there. I remember that was something that stood out to me in our past discussions.
Yes. So I'll give you an example of a tool that we developed for the Kenyan water sector. This is in partnership actually with the World Bank and the national regulator called WASREB. And the idea was, how do we create an accountability system between the citizen, the utility, and the regulator? And this is from citizen feedback. So citizens should be able to report a complaint to the utility, and the utility has an application that allows them to log, process, and track these complaints. And the regulator has a means of oversight, so they can be able to monitor compliance by the utility. And so Maji Voice, we added mobile channels such as SMS, USSD, that easily allowed customers to reach the utility. Some of the major impact of this tool, for example, Nairobi Water moved from taking 6 months to resolve one complaint to 15 days in a period of 18 months. Now that interaction it's huge, as it starts to build this trust, because now I know that even if I report a complaint to the utility, I have a means of tracking it, and I have a means of knowing that, yes, indeed, this has been resolved. And if indeed it has not been resolved, I can raise the complaint again. So that interaction now created this sense of accountability and created a sense of, allowed the utility to start moving towards this customer-centric business models. And so that's what led the way to now this increase in digital payments, because now people had a trust in the utility and their ability to provide services.
Yeah, and I think it's a really powerful story on the customer centricity side, and about it not just being a one-way sort of channel for you push a service and then they push a payment, and really we never have to speak to each other. But in order to implement something like that, in order to care enough to implement something like that, you have to have that perspective, and you have to have that kind of governance. And so, John, this to me is a big question I wanted to ask you, which is, I know that there is a view among some people that some of these technologies and some of these things just end up sort of being fancy, shiny toys, and they don't solve the real fundamental issues about, to your point, why it's an inefficient sector. And so I think you certainly see the benefits of fintech and digital finance in water and sanitation, but how do we sort of phase that with the different management challenges and the existing challenges and make sure that we're not just sort of glossing over it with something digital that doesn't really solve the big problems that brought us to this point to begin with?
A great question, and I think really Halima's comment is probably at the core of it. I mean, I can come into a utility and speak with the management and say, yeah, you need to move to digital payments. And to what end, right?
Right.
If it's not addressing a problem they have, right, if there's not ownership of that, and if there's not leadership buy-in, I mean, ultimately it's not going to achieve anything. It's a management problem, it's a political economy problem, it's not a technical fix. And, I would say any utility, any service provider that's looking to move to a digital strategy, this is not about bolting on mobile money payments. I mean, I have seen, particularly utilities where, they have unbelievably complicated process for taking mobile money payments, and it probably causes more problems than it solves. Really doing this well requires, a top-to-bottom overhaul of processes, a much more customer-centric approach, and a culture that is, open to feedback. These are not things that happen overnight, and a big part of that, I think, is shifting the sector to one that's much more focused on sustainability and where the incentives are in place. And I think Halima also alluded to, in many countries, I think, a shift towards more what are called ring-fenced public utilities. These are still publicly owned organizations that are providing service, but and these are typically in a municipality. The balance sheet is separate from the rest of the government, and they're expected to cover their own costs. And the goal is to wean them off of subsidy or provide subsidy in a much more performance-oriented way. Because I think in the past, there's been this sort of almost like an unstated agreement where utilities pretend to provide service and then customers pretend to pay. And getting out of that loop requires significant investment in upgrading service in order for customers to be willing to pay at all. And I think part of what mobile money does is it improves the customer experience, right, and does make them more willing to pay for service. And it frees up resources that hopefully can be invested in improving service quality, right? Moving towards 24/7 service delivery, reducing costs, improving water quality, all of these things that increase the willingness of customers to pay.
Right. Well, it's a really important point, and I think it's a really good transition to the question and answer session, because we've gotten a really good question here, which I think a lot of people probably have raised when I've talked to them about the paper and sort of the thesis behind it. So from Gilbert Knob, and please continue to send in questions, we get this: why the emphasis on developing digital payment systems when many developing countries still face enormous challenges with access to potable water? How do people pay for something that is not available? And John, I think if you wouldn't mind starting, I'd love to hear your thoughts on that question.
Mm-hmm. Well, certainly, I think water, in my mind, is less of an issue than sanitation at this point. And sanitation is an area where the off-grid providers and people who are doing really interesting things with container-based sanitation, I think digital payments enable them to provide a service that would otherwise have not been possible. So I think it's not premature to focus on digital payments there. I mean, this is creating something that is reaching an audience that could never receive this service before. On the water side, I think it's an important part of the story because there's people without access to potable water, right? Our vision in the water practice of the World Bank is a water-secure world for all, which means everyone on the planet has access to safe, affordable water and sanitation. It's a very inefficient sector, though, and unless there's willingness to provide ongoing subsidy to cover the cost of inefficient service delivery, there has to be a push for greater efficiency in the sector, or else the people who aren't getting service now are going to continue to not get service.
Right, and so if I'm losing money on the customers I have now, you're asking me to add more loss-making customers, and that's something I simply can't do.
Exactly.
Right.
And if a government is willing to subsidize that, then that's perfectly fine.
Right.
But most developing countries, that level of resource is just not there, and they're competing with other sectors for that same level of subsidy.
We've got a couple of questions here on the line, and Akanksha, I think I'll throw these to you, and Halim, it'd be great if you could weigh in as well. One is from Joyce Cacho. How are the results of this paper serving to make mobile technology access, including wider bandwidths, more accessible to rural infrastructure investments, especially those supported by the World Bank? So maybe, John, you want to address that as well. But we also have a question on the line to please address the challenges of how to digitize in real last-mile areas that either don't have consistent mobile networks or they don't exist at all, and how do service providers take advantage in all the ways that you mentioned, but with obvious challenges to access? And that's from Mike Barbie on the chat. Akanksha, do you have a thought on those two questions? How can we take this and the potential here and help it actually scale up those mobile networks to places they don't exist?
Here at GSMA, we are supporting mobile operators to enable wider access and wider rural access anywhere. We have a team called the Connected Society team that is basically focused on getting the networks to these rural and last mile areas. Having said that, if you just talk about sub-Saharan Africa, there is about, I think, 84% connection penetration. Subscriber penetration is low. I mean, on an individual basis, fewer people have it, but they have access in some way or the other to mobile phones. These, as you would understand, developing infrastructures are huge capital intensive investments. So this is something that mobile industry on the whole is anyway moving towards. And I don't see a clear link on how this paper itself would drive that, because that's happening organically anyway. And that is a priority of most mobile operators across the world. I think what it does link to is the point that I was making earlier. The more we are able to explore and point out the benefits of these basic services that are enabled by mobile towers and mobile technology, the greater impetus then goes to the mobile operators on why it's an even bigger issue beyond just providing connectivity and making people talk to each other. It's much beyond that. You open them up to agriculture services, financial services, health, education. So it's a huge enabler, and mobile industry on the whole acknowledges that and is working towards that, has been doing it for the years that have gone by.
I would even add one slice below that, I think, which is, I think the question of extending mobile access is, as you say, a much larger and complicated one. But on just the mobile money aspect, I think that papers like this and use cases like this, I think John brought up this point, demonstrate the viability for extending the distribution networks of mobile money to more rural areas. So if you actually have, somebody like Safe Water Network or Water4, if you have container toilet providers who are using mobile payments, then there's a real use case to be a mobile money agent in those areas. And we've seen this actually, we've seen this be a hindrance, I should say, where we've actually had service providers who have to create their own mobile money agents because they don't exist. And in some cases, they've even created revenue shares with mobile operators, and there's maybe some potential there. But the more use cases we develop, I think the more there's that business case, and it becomes much easier to change cash into mobile money and vice versa. To that point, I think we've got a question on sort of the chicken and egg nature of mobile payments, which is how can this use case, water and sanitation, be a driver for customers to adopt and use mobile wallets? Is it a key motivator, or do you first need a foundation of high mobile money usage, for example, in Ghana, before layering on services like this? or does it maybe reinforce customers going to an agent to pay over the counter? Halima, you've worked in a couple of different places, some with high mobile money penetration, some with almost no mobile money. Have you seen a big difference in how the penetration affects the sort of channel and the way utilities or other providers accept payments?
Yes, indeed. I can give you a comparison between what we've done in Kenya and in Malawi with the Lilongwe Water Board. Of course, Malawi being one of the newer markets. So, with Kenya, it's been, first it was building the case of just sending money between, especially people who live in urban areas, and sending money to your, relatives out in the rural areas, and then use cases were built on top of that. So the first utility was electricity, and then the water sector followed suit. And the basis of that was the fact that first the trust had to be built between the customer and the utility, the fact that my payment has been received, I'm getting the right bill, and that there has to be some sort of two-step authentication. So I get a notification from the utility, and I get a notification from the mobile money provider. In Malawi, it looks like the water use case is an accelerator to the use of mobile payments. So from the work that we did with them, they had a reconciliation period of about 40 to 60 days. This is in between a customer receiving a bill and then paying for the bill, and then reconciliation being done. And this amounted, the introduction of the platform that we gave them to reduce the billing period, mobile money payments increased by 156%, which is quite astronomical.
Wow.
So that's definitely a use case to build on mobile money payments.
Well, that's fantastic, and I think a really good data point to back that up.
I'd like to chip in here if we have
please.
Just a moment more. Again, a case like we have a grantee called City Taps, and they provide pay-as-you-go pay-as-you-go water services at household level, and they have these meters. They actually did a survey on their customers. They had installed 460 meters at the time. It's gone beyond that, and they plan to reach about 200,000 people by the end of 2019. But they found through that survey that 62% of City Taps customers were first-time mobile money users. This is Niger. This is not Kenya. So we are getting more and more data points like that. So it is coming, and I talked about the other benefits, more progression on the mobile money ladder from just P2P payments to more bill payments, which opens you up to more diverse sort of payment options. So it goes beyond geographies, and I think particularly water could be a good use case to scale mobile money beyond East Africa.
That's great. And John, did you want to weigh in there?
Yeah, I think look, people's time has value, right? If you imagine yourself as a utility customer in a developing world, you get your bill, you stand in line for a few hours at a branch office that might be on the other side of town. You've had to pay for transport to get over there. You finally get to the end of the line. You're haggling with the teller over whether they have change or because your bill's incorrect. You don't have the right identification. You have to leave and come back later. It's an incredibly frustrating process. And if this is a monthly bill, you're going through this exercise at least 12 times a year. So, I think, again, 4 billion transactions across Africa, the amount of frustration that this could alleviate for the typical customer, I think that's a profound use case for them, and it's certainly enticing to convince people who haven't dipped their toes into mobile money before to try and open accounts.
Yeah.
And then hopefully what we would see then is them starting to use it for other services as well, and then eventually even as an e-wallet. as a form of savings, and to see that really catalyze much more use of mobile money.
I mean, to your point, if I remember, I think there was a paper from Oxford in 2014 that looked at this question, and customers who were paying their water bills over mobile money were spending 86% less time paying for water bills. And wow. That's everything with buses and everything you mentioned there. So it's a really significant saving for the customer. And with that, I think we have a couple more great questions, but I'm afraid we have run out of time. So hopefully we can respond to these. Please feel free to reach out to us offline. I'd like to thank Halima and John again for participating in the webinar. Obviously, CGAP and GSMA, this has been a really incredible partnership for us. And so thank you, Akanksha, again for co-authoring and co-presenting today. Please check out the various research that GSMA has done in this sector and in other sectors, in the energy sector as well, and elsewhere. In agriculture, you can see their latest annual reports here and visit the M4D Utilities page there. CGAP, you can reach out to us at cgap.org, and I'm D. Waldron at worldbank.org if there's any direct follow-ups. We'd like to thank everyone who joined us today, and to all the organizations that spoke with us on the research. We look forward to engaging more on this topic and to continuing these discussions throughout the rest of this year. Thank you, everyone.
Thank you.
Thank you.